Thank you very much, Carl, for such a kind introduction. Good afternoon, and really, as my slide says, I'm really in love with Baku. This is my first time. Had a very short time to visit and enjoy. Yeah, and enjoy really your culture, the food, the wine. So really appreciate the opportunity of being here. And as Carl said, I'm supposed to talk about. Is it working this way or this way? Okay, so that's the end. No. Too fast. Okay. I'm supposed to talk about the underwriting for zero trends and opportunities, which is technology, of course, behind. Do we have motor underwriters in the room? Please raise your hand. No. Surprise, surprise. I don't see. Okay, so we're on equal ground because I've never been a chief underwriter or underwriter even. So maybe that's easy for me to talk. This one. Why is it moving so fast? Okay. From the underwriting point of view, it's always the issue to be able to assess the risk. And I'm quoting here a name of Henry Marsh. This is the guy who was a co-founder of Marsh McLennan, today a global insurance and consultancy broker, founded in 1905. And Henry Marsh is really a kind of, for me, a guy who committed his life to the risk understanding. When he started his business in 1905 in Chicago area, he wanted to understand the losses in the grain transport between Midwest of the United States and the coast of New York or California. So he spent 9 months traveling in the trains to understand the risk. Because he said, insuring is easy, but you have to know what to insure. And that's why I'm quoting him here. He also, was the founder and visionary for the Marsh McLennan companies today, which is, if you look to today New York Stock Exchange, it's over $100 billion company. So this is really a very powerful organization. But from our point of view, point of the discussion, we believe, or I believe, this is my understanding of the insurance, that underwriting is the process in which insurance companies is evaluating the risk of the car or individual to be able to offer a fair price to the customer and, of course, sustainable premium to the insurance company. Let's try it. Okay. So what the basic information we collect? I think everyone knows about that because all of us are mostly driving the cars and we every year have to supply some information too, but very quickly, it's about us, personal information, so age, the gender, the marital status, address. Of course, our ID numbers and locations and addresses, about the driving history and insurance history. Also about the car, all those details around the make, the model, the year, size of the engine, which is always surprised me why the size of the engine has the issue with the liability, but okay. And of course, the information, how we use the car, is it professional driving or it's for leisure, it's a family driving. So lots of those information that we need to collect and deliver to the underwriters to make sure that they have enough to do a magic. Because, as I say, I've never, except for maybe one company I used to work with, had the opportunity to follow how the underwriter is calculating. So do they have a crystal ball or do they have a system? Of course, they have a system. It's not about the crystal ball. There are three main methodologies they are using. It's manual, so where the underwriter collects all the information and then do the magic with his manual calculations. Automated underwriting, where on top of the information provided by the customer, he's able also to generate lots of other information from other sources, like from the, in Poland, the insurance guarantee fund, or from the police with all the tickets for speeding or accidents or traffic violations. And all of those information not are just information provided in the customer, but they also in very structured way. So that really helps him to automate his calculations with algorithms and applications that are available. In some of the countries, mainly US, insurance underwriting is based on the financial scoring, basically banking scoring. So if you have a good record with the bank, you have to expect that your rates will be around up to 50% better than on average on the market. The American companies found a very strong correlation between the two, and they have access to the banking scoring and they ask for it. It's public information, and therefore it's widely used. Although some states like California, Hawaii, Massachusetts, they are not allowing using banking scoring to the underwriters' calculations. So some critics says what my credit and the way I repay the credit has to do with my driving style. And that could be discussed, but obviously the market operates under this methodology. No. So what's the traditional day of this is insurance underwriter. So first he collects information, assesses, and try to analyze that, do the calculations, use the statistics, looks to the portfolio, and then he comes with the idea that, okay, I'm able to insure it, this car or this person, or I'm rejecting this application. But that, I hope, was the past. And in the room, I see lots of very young faces. So, but some of us probably remember the time when we need to have a pencil and a pen, and there was lots of paper to complete. And I think it's even not the problem to complete. The problem is not to make the mistake and do it again and again and again to be able to provide all the information in the right form. And then around 90s, last century, we got computers, and computers were very helpful to us because these kind of mistakes were easy to erase and correct. So the formats on the computer screen were much easier to complete for the clients, but also they provided certain structure to the information to the insurance company. So that was for me like underwriting 1.0, maybe. The true revolution, it really comes with the phone, because the phone, especially the smartphone, changes completely the game. Suddenly, in your phone or our phones, we can get access to the entire market in a given country in seconds. And you wouldn't have to complete anything. It's enough to make a few pictures of your ID, of the car, and you have the quotations, you have offers, you have ability to choose. And that's why the market suddenly grew by those additional functionalities, because there was no longer, I think, fight for, call it market share, but there was a fight for the client's convenience. And there is more and more of that customer experience and convenience, it's really more important than the portfolio size itself. Because especially in motor, the clients are not that loyal. I mean, at least in Poland, every year there are hundreds of thousands of people changing the insurance companies for just a few dollars lower premium. So that was something that the insurance companies observe, and they say, yes, it's good to have a big size, but it's even better to have the customers who are staying with us because they're happy and because they trust us on the long term. Because the cost of getting new customers and versus the cost of maintaining customers is it's a big, big difference. Therefore, customer convenience and experience was something that really matters and matters more and more, because today that trend is supported by regulators who demand that the customers get the best of the service in a very transparent and easy to understand way. I'm from the insurance industry, you also are, and really reading some of those general conditions of the insurance for whatever type, you have to be really smartest of the smart to understand it. So no wonder that the customer have lots of doubts and questions about that. But of course, no one is reading general conditions of the insurance, especially MTPL, because we have to have it. And they standardize either by the Ministry of Finance or supervisory authorities, or just regulation issued by the government. So there is this tendency that yes, obligation is a must, but there is also a right to understand, and there is a right to be satisfied with what you pay for. I'm paying for this insurance, so I have to understand its terms and conditions, and then be happy with the services that the insurance company is giving to me. So today, instead of this crystal ball, we have new things. And you call it IT or technology-driven crystal ball. And let me start from the bottom right, from telematics, because this is something that we know for good 2 decades at least with the telematics. This is not very popular among drivers, but existing and growing, which I will talk about a bit later. And then because of this telephone and the smartphone, suddenly we have something which is called Internet of Things. With the telephone, you can start your dishwasher or open doors in your garage, or being outside, or prepare food to be cooked in your kitchen when you still work, or driving your car back home. That's created completely new environment. Suddenly, the phone is a center of attention because it offers so many more opportunities for us as humans to work and take advantage of the technology. But that also opens lots of new opportunities for information collection for underwriters. Then, as we have so much information, the issue how we use that information. In opening session yesterday, and I think today also, everyone is talking about the tons of teradata of information that is available, but how we transform that information to something that is useful for the insurance companies. And of course, for many years, for decades or even centuries, companies had that information, but never used it to the full extent, because there was no tool that would help them to make proper use of it in the process of insurance. When I joined PZU, which is the largest Polish insurance company, it's around 1/3 of the Polish market, I remember Tomek Tarkowski sits there, we'll be speaking later, one of the meetings with our CEO, and he said that the company was in the process of all the documentation to be digitalized. And he said, you know that we had 31 kilometers of documents in paper? 31 kilometers of documents in paper to be digitalized. That shows the amount of information sitting, out there somewhere for decades, no one can actually use. They were not centralized, they were not structured, and they were not accessible to anyone who wanted to use them. So therefore, when you suddenly have that digitalization, and I saw in the whole Pasha group advertising the digitalization process, that's really great, but this is just the beginning. The other step is use it properly. And of course, all of us know that investment to IT are very expensive, they take lots of time, and they're also very risky from the point of operations. In that company, PZU, we had a very old system for motor insurance, for tarification. In order to change the tariff, we needed 9 months of the people's work to change the tariff. So people were changing, the PZU was changing the tariff once a year. We couldn't do more than that. The younger companies which entered the market and had the advantage of technology, they were changing tariff daily or even every few hours, depending on weather conditions in the given region or whatever they wanted to do, because they had not that legacy that we had in PZU. So at some point, we decided to change the system by the new, which is giving more flexibility. But still, investments in IT are highly expensive and long-term processes. Therefore, as soon as we got to this concept of the cloud computing, suddenly you don't need your IT structure. It's somewhere there in the clouds. No one sees it, but it's working. It's no longer about the servers and applications that you have to have in-house. It's about access to the service offered by global or private providers, like in Poland, where the supervisor requires that the cloud computing or cloud management of your data is done by designated few Polish private providers, not the global ones. Okay? But that's really another kind of element of that crystal ball, because with the cloud computing, you have unlimited resources and you have access to the newest applications. So if you have data, you can manage those data the way you want, in the format you want, with really much of spending time and investment. It's almost instant access to the service. You pay, monthly, like for renting the space in the garage. That's what you do. And that's really another thing. And then for the last, 10 years, let's say, we live with this AI, a buzzword, AI. AI is everywhere today. I mean, every company which has to do with IT today is AI. It's true or not, it's AI. But AI really has a lot to offer. And so we're coming to this fourth element or revolution that is not really known yet where it's going to lead us as the insurance industry. But I think, as you will see it later in the slides, every insurance company is considering AI as an element of the process in different formats, in different areas, but AI is like a must for the future. About telematics, this is Matteo Carbone. This is Italian guy with outstanding practice in motor business, and he's a global expert in telematics. And Matteo, for a good 15 years, is advocating the telematics. And he said a few months ago that all auto insurers will be telematic based. And if you look throughout the periods of what is the telematics penetration on the markets, he's right. It's growing. It's not really yet where we want to be as the insurance industry, because people don't like to share information about their driving. They are afraid of showing locations or maybe the way they drive. But on the other hand, you have everything in telephone, smartphone, and you allow Google to follow you, and Google knows exactly where you are, and also can calculate the speed you make distances. It will tell you exactly where you buy the gasoline or where you stop, what you eat for in the gas stations or whatever. We share that information, but we are not providing that to the insurance company. We are protected. And that's not just something that is unusual. I say most of European countries, except for Italy, a bit on UK, telematic is strong. But on the other hand, all the big insurance companies in Europe, including PZU in Poland, have to have something with telematics for kind of showing that they're modern, that they have some advantage over the competition. It's not for the entire portfolio, it's maybe just for the small parts of the portfolio, but telematics are more and more important. As you can see, telematics simply allows us to monitor the way the car is used and driven by individuals. From the underwriting point of view, telematics is a perfect tool for scoring. Helps you with lots of functions. I will not read that, but there is unlimited almost catalog of functions that you could have with telematics, depending on the telematics system and kind of modules you are using. You can have it with your telephone again. You don't have to install anything, just have a small app which allows insurer to follow and you to benefit from the fair price. Or it's enough that you have something which is like a, few business cards attached to your window. So it doesn't take lots of space. It doesn't require any installments. Has a battery for over 2 years. It stands all the conditions, hot sunny days like here in Baku yesterday, or really cold winters, -40 degrees, and gives the same information or even more because it's more accurate. We know by heart, by practice, that this device attached to the window gives better quality data than any smartphone you can get. But it's up to the insurance companies to promote and offer that to the clients. Gives you really what is important, because car is important. Like, car is the car. Car is on the road. Car actually, but it's not driven itself. It's driven by individuals. So what really matters is this one, the driver's profiling. So you can get all the information about all the trips, day or night, short or long, and how you fall into the different categories versus other drivers. Are you speeding? Are you slow? Do you behave? Do you cross the line? Do you pass red lights? All of that information can be there. For any underwriting, this is the clue today to say, yes, this is what I want to know. And then I can give the best of my price to the given driver. But telematics offers also something extra, which is the crash reconstruction. They can report actually the crash, and the insurance company could be really the first one to receive that information and to respond to it. In a sense that when there is an accident with the given force of the hit, you have automatic call to the insurance company assistance line or hotline, whatever you call it. And you calling back the driver because you have all his information, his policy number, the car, level of coverage, but you also have his number. So you call him. If he's responding, so you ask him the basic questions. Do you need an assistance? What can I do for you? If he's not responding, you send all the emergency services. You send police, ambulance, firefighters if necessary, because you have the geo position. You have his position exactly on the road. And that really matters. From the point of the customer who had an accident, and in the next 7 seconds, he get a call from insurance company, you are the champion of the world. Insurance companies is God, because they are helping him in that most important part of his policy history. It's not about insurance, it's about the accident from the client's point of view. And how often do you have the car accidents? Every few years, small one? So you really don't care about the insurance company itself until you hear from them. But when you hear from them, at the very most important moment, Maybe your family is with you in the car. Maybe they need help. You have the loyal customer for years. I mean, that's how it matters. So this beacon can provide all that information, but can also give you a very important context. It's not about that we had a crash with something, a tree or another car or a wall, whatever, but gives you exactly the picture of the road. Where is it? What is the road? Is it single line or two line, divided or not? There is a speed limit. And also you could read about 3 seconds before the accident to say, was he speeding up or he was braking? Was he changing the lane or he was driving still through directly? So that is crucial then for whatever claims handling, because you can actually assess, is he in fault or this is nothing he could do, just an accident, just happened. That's what the insurance is for. So this is very, very important element. Internet of Things, as I said, it's something which is growing and ballooning. I mean, we expect another billions of the new things to be connected together. And with these new developments in the car technology, all those autonomous cars, they will be connected because they need to learn from each other how to drive. The only way to make that process faster is to connect the cars on the roads, to make sure that they are learning from each other. So Internet of Things is something which is coming, it's existing, it's working, but it's gonna play still bigger and bigger role in understanding the risk as well. Cloud computing, as I said very quickly, this is just the new technology, how you build your IT department. You don't need to invest as much in the machines and systems. You still need some people, but your costs are going to be much, much, much lower. And of course, you have unlimited access to the computing capacity and use of the newest applications to make sure that your models, your information, data management is correct and up to the date, the best one you can have. Artificial intelligence, still very quickly at this moment because I will expand it, but it simply exists and it's giving more and more benefits to us. So this is just the few uses of artificial intelligence, as you see. It's better understanding the risk because you have more data, you can build more correlation model, you can actually get much more out of that data than just by manual calculations and human brain ability to swallow that. Data is really then structured and AI can help you really to structure it to, in hundreds of different formats that you even haven't thought before about them, that it's possible to do that. Because this is, again, kind of unlimited source of value that could be provided. Calculations, that's no doubt. And most important, customer experience again. Customer experience in the way the customer can feel that his pricing, his risk is really very, very individual. There is no, I'm not paying for my colleague Tomek, I'm paying for myself. That's why it's so important. According to some studies, and this is mainly McKinsey, the AI can add $1.1 trillion to the insurance industry. So that's the huge amount of money. Out of that, 400 billion is for underwriting alone. But there are some comments saying that, okay, everything is there, you can use it, it's fine, it's great, but be cautious. Because insurance company has that responsibility to explain to the customer what's in that black box called artificial intelligence. It's not about to say the data is coming and something is coming out. We need to explain very well what's in there, how we use those algorithms, how they build, and that's for the customer, but also for the regulator. So there is this constraint. But the other constraint, even more important, is that there's lots of challenges for the insurance companies to, not only from ethical, but also employees. What do you do with employees? How that's going to look for in the future? And that's, again, the study by KPMG. They asked those CEOs of the insurance companies. As you see, in most of the categories, there is lots of hesitation and reservation about AI. Still, as I see it in the last line, it should be 95, not G5%. 95% of the processes could be really automated with AI. Just 5% of the processes will stand with the people, the critical one, until this AI will be highly developed and able to run the way we see it. Yes. So I say thank you. That's very short. And if you have any questions, please feel free. I'm happy to answer that. Thank you.